Hey guys, welcome back to the channel. In this video, we're going to be talking about how to build a kind of a stock and crypto portfolio. I'm going to give you guys just some ideas and some things to think about. This idea actually came from a live stream that I was watching, and that live stream was from Robert C. Eidson. I'll put a link down below to his channel. He gives the best advice on business and life. All right, so without further ado, guys, let's talk about how to build a crypto and traditional stock portfolio, right? This is actually coming from one of his subscribers, and I thought it'd be fun to kind of answer that question, or, you know, at least give some ideas on how I would probably approach this. So this is what we're going to be covering. We're going to be talking about how or the ETF that we're going to start with. We're going to be talking about what crypto I would add, and then ideas for portfolios, as well as some investing tips at the very end. All right, so this is what we're going to start with. If I was going to build a portfolio of stocks and crypto, I'm going to want to keep things very simple, and I'm going to want to go with a great ETF. Okay, investing in one fund like the S&P 500 makes it super easy to manage. You don't have to track a bunch of stocks or worry about switching things around. So I know the S&P 500, investing in the S&P 500 is not super sexy. You're not gonna, get these crazy returns like you would if you gambled all your money. But, building wealth, I'd rather build it slow and for sure than, gamble my money away on, something else or at the casino. So at least if you're investing in the S&P 500, it has a track record, and we'll get into that in just a moment. But yes, I would go with an S&P 500 index because it has 500 companies. So an ETF like VOO is never going to go to zero. Okay, and you don't have to worry about a rug pull or anything like that when you invest into S&P 500 ETF. So it also has built-in diversification, which some of you may already know. The S&P 500 has 500 companies in the ETF. So when you're buying that single ETF, you're spreading your money across 500 different companies. So even if those not all 500 of those companies are going to go down or bankrupt all at the same time, unless we hit like a nuclear winter or a meteor is about to strike the world. Like, that's just not going to happen, or maybe a zombie apocalypse, but I can never see that happen. So you're getting a little bit of everything. You're getting some tech, you're getting healthcare, you're getting finance, and it's all included in one fund. Okay. And finally, this is what I want to show you guys. Whoops. So this is an ETF. This is VOO that I'm showing you guys. And as we can see, let me get my little red pen here. As we can see, it has 508 different companies, right? As of 9/30, right? I haven't updated this screenshot, but as of 9/30/2024, it has 508 different companies in the ETF. And the best thing about this ETF is it's going to eliminate some of the older, not the older, but it's going to eliminate some of the not good performing companies. It's going to just kick them off and replace them with newer companies. All right. And that's all done passively for you. All right. It's all done for you. You don't have to do anything yourself. You're not picking and choosing. It's just you buy the one ETF and you already get access to companies in the technology space. You're going to have companies in the financial space, healthcare, consumer cyclical, energy, utilities, real estate, industrial communications, right? So you're going to be investing in all those really big tech stocks, right? The ones you know, like, and love, Meta, Nvidia, Tesla, Apple, Microsoft, Google. You're also going to be investing in like companies like Verizon, AT&T, T-Mobile. You're going to be investing in real estate companies like Federal Realty Trust or Realty Income. And then for, probably consumer cyclical, you're probably thinking maybe like Target, Walmart, if I'm not mistaken. I think those would probably go in there. Financials, you're going to be investing in banks, right? So again, when you invest into this one ETF, you get so much broad diversification, right? Can't speak highly enough. So this is what I would use to start the portfolio, okay? Again, investing into an ETF, I want that ETF to have a strong track record, okay? So I'm not going to be investing into an ETF that just started in 2020. I'm not going to be investing into an ETF that has a 5-year track record. I'm not going to be investing into an ETF that, probably did really well in 1 or 2 years, but then it's been flat for like the last 3 or 4 with a massive decline. Okay, if you want some examples of those, You don't have to look very far. Not knocking her, but if you look at Cathie Wood's ARK Innovation Funds, a lot of them have not done really well. They were all the darlings of 2020 and 2021, and ever since then they haven't really quite recovered. So again, I want a ETF that is gonna, probably mitigate a lot of that risk. It has a long track record, well over, a couple of decades, and there's performance there, right? There's performance, and I mean, not to gloat too much about it, but there's been a lot of books written about this. Okay, so this is what, this is how the S&P 500 performed over pretty much the last 100 years, right? Since 1903. So they've been tracking this, and this is through wars, this is through recessions, this is through depressions, this is through crises, geopolitical tensions, countries going to war with each other. This is going through, political strife in America. This is going through everything. And the S&P 500 has always returned, right? It's always returned a positive result, a positive return. And, even, again, you just can't beat the S&P 500. And since 1903, it's returned historically between, like 9 and 10%, right? And then if you adjust for inflation, it's closer to like 7 or 8%. I mean, that's pretty good given that you didn't have to do anything. You just kept buying and you just let it do its thing. You just let it grow over time, right? And you just kept dollar cost averaging. Not a bad product. So what crypto would I add? So right off the bat, I'm going to tell you guys, I'm not a big crypto guy. Okay. If I had to rebuild a portfolio and if I had to choose, I'm going to opt for large cap coins. All right. I'm not going to do the meme coins. I'm not going to do the altcoins or the small cap coins. All right. I'm going to opt for large cap coins. And the reason is because you're going to reduce your risk substantially when choosing a coin with a large market cap. It's going to have high liquidity, institutional interest, meaning banks or hedge funds or these large whales, these large players in the space. Think like MicroStrategy. They're buying this stuff. These are businesses, banks, institutions, companies that have lots and lots of money, a lot of smart people. And if they're investing into these, coins, then there's something there to be said. All right. And widespread adoption, right? You can buy Bitcoin on most brokerages. Okay. On most brokerages, not all of them, but most. So Bitcoin, like I mentioned, is going to be the first coin that I'm going to go with. It's the first cryptocurrency and remains the most recognized, acting as a store of value and, quote unquote, digital gold. So I would go with Bitcoin. It has a large market cap. And right now we've been seeing, of course, since our president elect is, now in office or going into office, we've seen Bitcoin basically run up. All right. So this is why I would rather trust Bitcoin than a lot of the alt coins or a lot of the meme coins, right? It's just because Bitcoin has a better track record than most other coins out there, right? It has a performance record. It has a track record. It's been around since 2008, 2009. You can't go anywhere in the world, almost anywhere in the world, without, mentioning Bitcoin and people not knowing what you're talking about. Like Bitcoin is everywhere. And I just heard actually in the news that China is going to be opening up their doors to cryptocurrency / Bitcoin here in the near future. So again, could be a really big opportunity. The second coin, which I would probably recommend, is Ethereum, because that is probably a coin that has a lot of use. It has, a vast ecosystem of decentralized applications. Don't ask me what that means because I pulled this straight off Google. I did invest in Ethereum and Bitcoin. Then I sold out of my Ethereum and just moved all the money into Bitcoin at one point. And then basically I sold pretty much all my Bitcoin and moved all that into real estate. So, these would be the two coins I would go with, but I would lean more on Bitcoin just as as myself, because I know whenever Bitcoin goes up or it goes down, the rest of the crypto market follows, right? The rest of the crypto market follows. So, and you know, there's studies being done showing that Bitcoin and the S&P 500 are almost dropping and falling at the same time. So I don't know. Maybe, you know, there again, when we're talking about trends and looking at, you know, patterns and things like that, it's just kind of funny is my takeaway from it. Because if there's a lot of enthusiasm in investing, you know, there's a lot of hype in the stock market, and then there's going to be a lot of hype and enthusiasm in crypto, right? And the same thing can be said when investor sentiment goes negative and it goes sour and people start pulling their money out of the stock market. People are going to do the same exact thing with crypto. So it's just interesting is what I'm saying. So just a quick tip. If you can't buy the coins, you know, if you don't want to buy the digital coins and put them on a wallet or whatever, you can actually buy the ETF version. You can opt for the ETF versions of the coins. There's the iShares Bitcoin Trust, ticker IBIT, or the iShares Ethereum Trust, ticker ETHA. Now, these are just two different ETFs. There's several of them out there, but these are just two versions of them, all right? These are just some that I found. I know their expense ratios are a little lower than the other ones, so this is why I put them here. But of course, you want to do your own due diligence. So this is how I would probably look at a portfolio, right? This is how I would start it. I would follow a core satellite approach. So the core satellite approach combines a stable, diversified core portfolio with a smaller, higher risk satellite investment to balance stability and potential outperformance. So you can start with something like the S&P 500, right? I would choose that as your core holding. That's going to be your risk mitigated, safe, risk adjusted, you know, long-term holding, that has a long track record. I would go with 50%, right? You can go with 40, 45, 47, 55, whatever, right? This is just an example. Then I would probably add some tech. I would definitely add some tech. You know, tech is really hot right now. It's probably been hot for the last decade. And I honestly can't see tech going away anytime soon because, you know, just brand new innovations are coming out almost every other day. Right now, we're still at the cusp of AI. So AI is going to be taking off, right? Yeah, just tech is the way to go. And, you know, we still have self-driving cars coming out in the future. Then there's talks of VTOL, which are vertical takeoff vehicles, you know, like think of like a car, that has propellers and it can lift and go everywhere. So that's interesting, right? And, you know, there's also energy that's coming out and all this other stuff, right? All this other stuff. So I would want to get exposure with tech, probably go with an ETF. I'd probably choose VGT if I had to choose. You can go with QQQ, you can go with VGT or FTech, right? FTEC. Then I would, you know, probably have a little bit of gold. You can go with the gold ETF or actually own the physical gold, whatever you want to do. Then you can have like your own individual stock, right? Maybe you're interested in owning like actual shares of Nvidia or Apple or Microsoft. Then you can get to your crypto coins, right? You can have some altcoins, you can have some Bitcoin, right? Or you can just get rid of the gold, the individual stock, and the tech, and just go Bitcoin right here, right? You can do whatever you want, but the core satellite approach is used in case things go bad, right? It's used to help mitigate risk. So if this altcoin at 5%, like let's pretend this is a hypothetical $100,000 portfolio, you can have $50,000 in the S&P 500. If your $5,000 in the altcoin, let's say that jumps to $15,000, that's great, right? That's awesome. But let's say it goes backwards and you end up losing all $5,000. Well, your whole portfolio is not going to go in the gutter, right? Same thing with Bitcoin. I can't see Bitcoin getting rug pulled or going to zero. I personally can't see it. I don't know if the creator of Bitcoin is one day going to show himself and rug pull the whole world. I don't know. I don't think that's possible, to be honest. But again, you know, I want to hedge my bet. So I want to be a part of, you know, the Bitcoin, you know, fervor, the Bitcoin hype. So I want to get in on Bitcoin. So, you know, this will help kind of alleviate that FOMO, that fear of missing out. And then, you know, you can have your individual stocks, like I said. So this is kind of just a portfolio idea. So I have two more ideas for you guys. But real quick plug, if you guys want to join my Skool community, I'll put a link down below in the description. All right, so let's talk about ideas for a portfolio. Another one. This one is the 90-10 portfolio. So you allocate 90% to stocks for stability and growth and 10% to cryptocurrency for higher risk, higher reward potential. Okay. This would be for the really, the people who don't want to risk a lot of money. They just want to dabble in crypto. This is probably a portfolio for them where they're going to put a little bit of money in crypto, maybe a little bit in Bitcoin, maybe a tiny little bit in, an altcoin or a meme coin, but they're not betting the whole farm on crypto. So they can have 90% to an ETF like the S&P 500, and then just kind of ride it out and just see how it goes. And then they can do what's called a rebalance, probably once a year, or maybe 2 times a year, whatever they feel. A rebalance is basically, let's say the stock market is doing exceptionally well, but Bitcoin is down. Let's say there's a drastic pullback and Bitcoin goes down dramatically. Well, like at the 6-month mark or maybe the year mark, you can do a rebalance, sell some stock and buy some Bitcoin, right? Likewise, if let's say Bitcoin jumped 10% and, now it's, and the stock market dropped 10%, well, you can do the same there. You can sell some Bitcoin and buy some stock, right? To bring this all back into balance. You don't have to do that. And if you do that, just be aware that there could potentially be tax consequences. All right. But rebalancing is important. I don't do it as much, like I used to, because my portfolio has been in a bear market for pretty much the last 2 or 3 years. But eventually I do plan to do a rebalance. So the final portfolio idea is just doing 5% to 7% of your total net worth. All right. Let's say you have, $1 million portfolio, right? And I'm talking like that's all your money. That's money in your banks. That's money in your house. That's money in everything, your stocks and crypto, everything, right? You can just do 5% to 7% of your total of your net worth. Instead of doing it based off the portfolio, you can do it based off your net worth. So a smaller allocation to higher risk, higher volatile investment ideas. This is what this would be perfect for. Again, to determine your net worth, you basically add up all your assets and subtract your liabilities. So a mortgage, credit card debt, any loans you might have, things like that, right? And then that's how you come to your net worth number. So let's pretend this is a portfolio, $1 million portfolio, right? Person has $380,000 to stocks, right? Maybe it's a 401k, maybe it's a combination of 401k / a brokerage account, right? Then they also have their real estate. Maybe it's a couple rental properties. Maybe it's just their home. It's just, $420,000 in home equity. That'd be pretty cool, right? Then they have a little bit of gold, silver, like about $8,000 worth. Maybe it's hard gold, hard silver, like physical assets, or maybe it's an ETF. Then they hold a little bit of cash, 5%, maybe $5,000 in the bank, savings account, what have you. Then you can have like 7% in crypto, right? 7% of your total net worth, right? 7% from all your accounts. You can put $7,000 into crypto, whether it's a split between Bitcoin, Ethereum at a 50-50 split, 60-40 split, or maybe it's just all in on Bitcoin, all in on Ethereum, or maybe you want to take an even bigger, greater risk and you decide to go all in on an altcoin or coin. All right. So that'll pretty much do it for me, guys. Here's just a couple investing tips that I want to share with you guys. Be careful about FOMO. All right. FOMO will make you lose a lot of money, a lot of money. All right. The examples I can share with you from personal experience is I got into 2 crypto coins. I had no reason being in the crypto space. Got into, it was like probably 2 or 3 different coins, and I ended up losing about $10,000. I got in with a momentum stock and lost about $9,000, I think, $9,000 or $10,000, right? So, and that was based off nothing more than FOMO, fear of missing out. So those mistakes right there basically helped me create my statement on what type of investor I am and the rule set and the bumper rails that I follow. So I don't invest in crypto, altcoins, shit coins, all those kind of coins. I'll probably go with the safest coin, which is Bitcoin. I may even do Ethereum in the future. Don't invest what you aren't prepared to lose. Okay. That is the golden rule. Never invest what you aren't prepared to lose. But again, we can mitigate a lot of these risks by investing into safer risk adjusted assets like the S&P 500 ETF or like Bitcoin. Okay. So you can make smart moves, smart decisions. Okay. You don't have to turn $10 into $100. Okay. The point I'm trying to make, guys, is that don't look for overnight success. Don't look for overnight millions, because you will probably lose a lot more money searching for that stuff than you will make money, right? And you could be putting yourself in a very dangerous position. All right, you can mitigate, like I said, mitigate risk by going with safer proven assets, stocks, bonds, real estate, Bitcoin, and be weary of pump and dumps, rug pulls for crypto coins. It's pretty much 99% of the market out there. All right. A friend of a friend of a friend told me about this coin. It's going to go to the moon. It's got this backing. It's, got this engineer from Facebook, this engineer from Google, it's the AI token, and, it's this, it's that. Like, come on, guys. There's no utility for 99% of these tokens out there. All right. No utility. So again, do your own research. Be careful who you trust. Be careful who you listen to. All right. Building wealth is a long-term game, so play the long-term game. I'll see you guys in the next video.